Happy last day of the quarter, and stocks are rising to close out the quarter. The S&P, the Nasdaq at the highest since about mid-February. Check out the indices for the quarter as well. The Nasdaq having its best quarter since the fourth quarter of 2020 and outperforming the Dow, I think, by some of the most that we haven't seen since 2001. Let's take a look at some of the individual stocks that we're seeing. Check out Tesla. CEO Elon Musk headed to China to meet with Xi's number 2. China is Tesla's second largest market. Virgin Orbit grounded for the foreseeable future. This is after Sir Richard Branson failed to secure a funding lifeline and now cutting 85% of the workforce. And I think it was part of their satellite business as well. And many parts can't keep up with Elon in that.
No, it's very hard to keep up with Elon in anything, but it's even harder to keep up with this guy. We've got Charles Payne of Making Money with us now. I want to talk Virgin Orbit failure with you, Charles. And for me, this is all wrapped up in the SPAC story, the SPAC saga, you might call it, that we've seen over the past couple of years. Some early winners in that story, a lot of losers now, and it's a pretty imbalanced story, I would say.
It's extremely imbalanced, and you know, it was. Here's the thing, all right, and I've been railing against this for a long time. A bunch of money came into our economy, and Silicon Valley and Wall Street took advantage of it. So 435 IPOs and SPACs in 2020. 1,035 IPOs and SPACs in 2021. Jeez. That's like 5 or 6 years equivalent. And just all the garbage you can think of, all the crap you could think of. And it's really frustrating because in the SPAC area, you had Chamath Palihapitiya, who was treated like a king on CNBC. I hate to, bring this up, but he was brought on almost all the time to promote these things. Right. And then you throw in a name like Richard Branson. Of course, that sounds like an unbeatable combination. But last March, Palihapitiya sold $213 million worth of the stock. So, a lot of people made a lot of money. It's the same people who made a lot of money and the same people who lost a lot of money, i.e. the individual investor.
Right. You know who's actually making a little money in his SPAC today? President Trump. Because of all of this, so that it's moving. But having said that, Charles, I want to get your take on this because Fox News' Peter Doocy had an exchange with Press Secretary Karine Jean-Pierre over some of the concerns about AI. Listen to her response.
There's an expert from the Machine Intelligence Research Institute who says that if there is not an indefinite pause on AI development, this is a quote, literally everyone on Earth will die. Would you agree that does not sound good?
Your delivery, Peter, is quite something.
It sounds crazy, but is it?
All I can say is that there's a comprehensive process in place. We put out a blueprint back in October, as you know. I don't have anything to share.
So she's admittedly, openly saying that they've got no idea how to respond to these dangers and giggling about it, too. What do you make of it?
These dangers have been lurking from the very beginning, from the very, very, very beginning. I tell people all the time the word robot itself came into our vernacular through a Czech play. And at the end, robots killed off humans. Once they learn how to procreate, they wonder, why did they need us? So that's been the backdrop to this next leg of development for a long time. Yesterday on my show, I played a recording of Stephen Hawking's back in 2016, warning about this. But again, the warnings have been out there. And it's so weird, because I don't know what this blueprint is that she's talking about, but it is something that's worth being concerned about. You don't know what the guardrails are, and yet the idea is like, who's going to really put a pause? I mean, yes, it's cute that Elon Musk put his name to this, but this is a race. And no one's trying to get behind on this race.
I will agree with her. It's Peter's delivery that does it for me every time.
Absolutely.
I want to get your take on the Fed's delivery. This morning we got PCE, we got some of the consumer spending income numbers. So it's slowing down, but inflation's actually coming down too. I think core PCE was down to 4.6%. Is the Fed's job working? Are they getting closer to that elusive 2%?
They're getting closer to it, but 2% is a long ways from here. And that's the one thing I've had a problem with the Fed from the very beginning. Two issues here. The trillions of dollars that poured into this economy never poured into this economy before. There's never been anything like this. Never, never, never. So you can go at this with these 75 basis point rate hikes after another 50 basis points. What they've hurt the most is they're hurting the lower 50% of households in this country. At this point, every 1 percentage point that it goes up, people who have interest-bearing assets the top 30% of Americans are making billions of dollars. The other 70% are just seeing higher credit card bills, higher auto loan bills, higher rent, whatever it is. So I think they're actually hurting themselves and they're hurting this country unnecessarily. You got to take it slow. 2%? I mean, 2% is like 3 years from now.
Yeah.
Let's talk about some of those interest-bearing accounts. I think it's interesting. We're talking about the outflows from deposits actually into money market funds, because your bank isn't paying you anything, but the money market fund might be giving you 4.5%. But is that further than exasperating some of the pressure that we're seeing on the deposits in the banks?
Sure. And this has been the stealth story for almost a year now that very few people wanted to talk about. But we saw deposits coming out. We saw a lot of money coming out of banks all of last year. Most folks shrugged their shoulders. Not a big deal. I think one of the sad ironies of this is that if you listen to Janet Yellen, the last few times she spoke, she intimated that if you have money at one of these large banks, it's going to be covered above $250,000.
Right. Yep.
And guess what they're giving on their savings rates? 0. So,
0.01.
Right, so they don't have to compete with money markets, but the small banks do, and if they compete, that means they make no money, and they're in a serious bind.
So the big banks are getting a Yellen subsidy, basically. That's what her rhetoric is giving them a subsidy.
It's that whole de facto thing that Fannie Mae and Freddie Mac used to have, right? Implied that, hey, we got you covered if you put it in one of these giant banks. But if you put it in there, you get squat. You get squat. And by the way, here's the irony. All that money I talked about, $1 trillion that came out of banks over the last year, the overwhelming majority of it was from big banks. So they say, well, let's save the billionaire depositors of Silicon Valley Bank, because if we do this, we'll save small banks. What's happened then? All the money's come out of small banks into the big banks. It's nuts. It's so unfortunate. And I think they've gotten themselves in a bind right now. If we start to see a few more of these banks go down, they're going to have some serious public relations problems. And I don't know. The Fed always has to step up.
Yep. Well, we're fortunate to have you here with us.
Help us explain, to be here. Thank
do
you.
The fun stuff. Charles, thank you as always.
And you're fortunate because you can tune in and watch more of this on Making Money with Charles Payne right after the Big Money Show at 2 p.m. Eastern. Legendary investor Ken Fisher joining Charles for his outlook. That's at 2.
That's
Don't miss
Ken
it.
Hands Fisher.
Ken Hands Fisher. He had you some good advice, I think.